Hey guys, what's up? Alec back with the daily stock market. And what's up, guys? It's green, green, green. Have we been waiting for this day or what? Everyone that was buying last week during the dip, congratulations, hats off. You guys have earned it because I know a lot of people don't have the stomach to buy when the market's down and red. So if you did, you are reaping the rewards right now. So in the beginning of the video, we're going to recap the options. We're 4 for 4. All 4 options that we called out on the last video on my channel, the video right before this one, every option has hit. So if you did follow that video, you have made some money. So congratulations once again. Now this video, the second half, is going to be all about electric vehicles and electric vehicle updates. We're going to go over 10 different EV stocks and updates, price points, targets, and what I think about generally about the EV market too. Remember, the EV market was hit very hard in the last 2 weeks, so it's a great time to be buying the EV market. Now is definitely the time. They're down, some of them are down 30, 40, 50% still to this day, so you can take advantage of that. And look at that, guys, up $2,100, 6%. And we just got the notification, ChargePoint up 10% to $31 today. So electric vehicles are the buzz right now, and it's probably something you definitely want to be buying along with big tech. Now, if we go to the past week, we'll see we're up 17% in the week. $5,000 we made this week just from buying the dip. That's all we've been doing is buying the dip, and we made $5,000 this week just from buying the dip. Obviously, we had the big dip going on, so we lost some money in the month. Well, we're still up $1,400 in the month, so I shouldn't say that we lost money. And in the last 3 months, this is when it starts to get interesting here. You'll see we're up $7,500, guys, 26% in the last 3 months. So we've actually been beating out our all-time high, and that was only because we were buying during the dip is why we're beating out our all-time high and our account's doing so well. In the last year, what you'll see is we made $16,000 in the past year, it says, and we're up 81% in the last year. So if your guys' portfolio doesn't look quite like mine and you need a little bit of help getting your portfolio to the next level, go ahead and reach out to me on the DMs. I'm actually accepting new students in my program right now. If you don't know my Instagram page, it's the Daily Stock Market, same as YouTube, same as Instagram. It's where you can find me. Just type it in and I'll be popping up. And beginners are welcome, so don't think that you're too newbie or anything like that. I will be able to help you the right way. I actually have a beginner program, so it outlines every step that you should be taking and things that you should be watching for in the beginning of when you're first starting out, you're investing in venture, so you don't make any newbie mistakes. And you might be surprised because I've had some people in the market for 6 months, 12 months, even 2 years take my program and say, wow, I can't believe I didn't realize I don't do some of these things that you listed in your training program. So go ahead and reach out to me in the DMs, but let's go over the options yesterday that we called out. The first one was ticker symbol SPY. We also talked about XPEV, which was more of a risky one. And we also talked about Apple, an Apple call, which I'm still currently holding two of the options. I already sold 2 of them. So you guys can kind of tell. So the Apple call, we're up 16% on it. So nothing major. That's why we're still holding it, because my goal for this option is to go 30 to 50% at least on this Apple call. And SNDL, it's nothing major, only up 30%. So I think we can still go a little bit higher with this SND call. This was a little bit more of a risky option, so I wanted more risk to reward. So I'm looking for like 100% plus gain on this SND option. Now, obviously, it might not hit, and there's obviously risk involved. The stock's up 7% today, and it looks like it's headed down. It's actually fluctuating a little bit crazy here, so who knows what it's going to be doing, but I'm happy to risk it on this one. I'm going to put a trailing stop loss of probably maybe like 10%, so I at least get that 20% gain and I don't risk too much equity. So if we go over to the DMs, one of my students here, Christy, was actually trying to do a Disney option, and I recommend that you should probably be doing one of these options here too. So it paid for itself pretty quickly. This is the SPY one. She made 66%, $300 on that option. And then she also did the XPEV call and made another $189, 76% on that one. and it really helped out her portfolio, spiked it up. She said, wow, oh my God, the program paid for itself in nearly 1 day, and you got me back to green. Thank you. So this one from Jordan says, you are the man. Thank you for recommending this. It's the SPY ticker, and he made 75% on it and almost $686. So congratulations on that. Here you'll see Tracy made the XPEV call, also up 100%, $200, and said, thank you for recommending XPEV option. Do you think it's a good idea to cash out now? And you'll actually see NDM, I saw you posted it. So I give live updates on my close friends private story when I buy and when I sell also. So you guys are in the loop with both. And the list goes on and on. I can show you, success all day, but I'm not going to do that. This one's another XPEV one, nearly doubled, it said. 38% on the Apple call. So then he asked me a question, and of course I always respond to my students. So if you want daily access to me, that's also part of the program. But let's get right into the main part of the video, which is going to be the update on the 10 EV stocks. All right, so the first EV stock is going to be Tesla, TSLA. Everyone knows it. Everyone loves it, up 10% in the last week. But look at that, guys. It's still down 20% in the last month. So don't let that fool you. 20% is still a huge dip for Tesla to have. So right now it is in a buy zone territory, and you can consider this for a long-term position. I probably wouldn't buy any short-term positions now because for all we know, we can see another dip back down. I'm not saying that we will, especially with the stimulus coming. A stimulus should be here in the next few weeks, so that's going to be absolutely huge for the stock market also. Overall, we were buying a lot of Tesla during the dip, and we averaged our cost pretty low. We got our market value up to almost $1,200. Our average cost is $660, and I would say anything under $660, I'm personally going to be buying. And I might even buy a little bit under $700 because I think that this one can go to $800 again, especially with the hype rolling back into Tesla is something you have to consider also. Now, when I put a range, that's why I typically put a big range for Tesla and stocks that move. For example, you might see like buy from 400 to 800 or 500 to 800. What that means is typically I buy very light at the higher number. So 800 would be the higher number. I won't buy as much, but I'll still buy. Don't get me wrong. I'll buy like $50 here, $50 there, just to keep adding to my position consistently. But when you see the smaller number, like 800 to 500, the lower number, the $500, that's when I start buying extremely heavy. So for example, when I was at like $600, I was putting in like $500, $200. And if it got even lower to that $500 goal that we set for Tesla, then I would have been buying $1,000, $2,000. So when you see a range in my videos, you have to consider buying heavy at this lower price and buying a little bit lighter at the higher price target. Overall, I would still say I'm buying this one, so keep Tesla on your watch list. And I know you guys liked in the last video when I rated the stocks on a scale of an A to B, or an A to F, and I'm going to do that again on these videos. So I'll be rating Tesla an A. They're going to be an A. They're my favorite, my number one favorite EV play. I think it's going to be a winner take most. You hear Kathy Woods talking about winner take most. So it's something you want to familiarize yourself with. And all that means is that Tesla is going to dominate the EV market. So they're going to have about 60%, 40 to 60% of the EV market as a whole. In China and in the United States, they'll probably have closer to 60%. They're going to be absolutely dominating on commercial fleets and residential fleets. They have semis coming, trucks coming, SUVs. So in my opinion, I think Tesla will be dominating in the next 5 years. If you have a long-term portfolio, you want to start stacking it with EV stocks, including Tesla, in my opinion. Now, the good thing about this one, this could also be a swing trade up to like 850, 750, somewhere in that range. If you are swing trading, you probably bought closer to $600, and you can start taking light profits at $750 and heavier profits closer to $850. So guys, the next stock we have up here is NIO, ticker symbol NIO. Everyone loves it, and it's been a hype stock for a long time. It died off a little bit. The average volume is 100 million, so it's back up. I think at one point it was like 70 million. It was dying down a little bit. And you'll see I have about $1,000 of market value, and I took this dip as the time to average down because my cost was actually pretty high. and I wanted to average down. So I'm about $46. I took it as an opportunity to average down. Remember, it got as low as $35. And if you go back to my videos, guys, I was calling NEO at $35 for an extremely, extremely long time. And everyone was calling me crazy on my videos because they're like, NEO will never go back down to below $50 ever again. And this was for a long time. People were saying this on my videos, but I called $35 a share probably 2 months ago, if you go back to my videos. And if you're a long-term subscriber, you probably even remember me calling NEO going down to $35. Said it several times, and I was getting so much hate for it too. So you definitely should have been buying NEO at 35. And if you're a long-term subscriber, you definitely were buying NEO at 35 because I've been preaching it for a long time. And I've been telling you how good of a long-term position they actually are, especially because I think they're going to have a winner take most, specifically in China. So China, they're going to be one of the biggest EV. We're going to talk about a few other China EV companies, but NEO, I think, is going to be the leader. That's why, in my opinion, they get an A. So they'll also get an A along with Tesla. And I think that they are going to be mainly a long-term hold. But you can, oh, look at that. Workhorse is up 10% today too. So that's going to be on the list later on. So stay tuned. Make sure you watch the whole video if you want to hear about Workhorse. But what I was saying is before we saw that is that I think that this can be even a short-term position. So if you want to swing trade it up to $55, $60, I think that is very possible. It might take a little bit of time. It might come sooner than we think. But I think $55 to $60 is a very realistic swing trade. All right, the next one on the list is going to be XPEV, ticker symbol XPEV. That's why we call it XPEV, and it's obviously pronounced Xpeng. But what's going on with this one, and if I only had to make a top 3 list, like three EVs, this would have been Tesla, NEO, and XPEV. But we're going to add a few other ones. And excuse the length of this video. Sorry if you don't like super long videos. But, you know, I wanted to touch upon a lot of these different EVs because I know some people might not own XPEV and they might own, you know, Workhorse or vice versa or some of the other ones on the list. So I want to talk about as many stocks as possible because I know, you know, obviously we don't own all 10 of these. You know, one person doesn't own all 10, but several people, I bet, own every single one of these stocks. So we'll go rapid fire on the rest of the stocks moving forward. So Xpeng, what's going on with it? It's up 19% in the last week, which is huge. And we are big on XPEV. I actually have 1,500 total. I have $1,000 on my Fidelity account also, up 12%. I was buying the dip extremely heavy, as you can tell, because my average cost is $30 on XPEV. And they were at 72, 46. So they really weren't at $30 for long. I really capitalized on the position they were down, and their lowest was 26. So if you bought at 26, congratulations. You already hit yourself a mini swing trade. They're still down 24% in the month. And this is one I still see value in. That's why I'm holding. I'm looking for about a 60% gain on this stock. So I think it's a great swing trade and also a long-term hold. If you look at their vehicles online, they have the Lambo doors on their cars. So they're a luxury car and their cars look really nice. So I think they'll be taking not obviously most of the EV market shares, but I think they'll be a number 2 or a number 3 player in the EV market space for China specifically. So I should note, if you guys don't know, NEO and XPEV and the next one we're talking about, Li Auto, is going to all be China EVs. And you guys should have known that, but I just wanted to throw it out there for anyone who didn't. So here we have Li up 12%, and I think that the EV market and the whole renewable sector, even like iClean, for example, I was buying that one heavy, as you guys saw. They all got hit really hard with the dip. So I think right now is a great buying opportunity still. Even though they're up 18, 19%, 20% in the past week, if you go to the month, they're still down like 20, 30, 40% from their all-time highs. Like Li Auto, if we still go to them, look, they're still down, what is that? Sorry, it's a little hard to do it on the phone. They're still down 28% from an all-time high. And I'll make a full video about this, but the lower you go on the percentage, like if you lose 16%, it takes like 20% to make back that 16%. I know it's super confusing to think about, especially if you're a beginner. You would think that if you lost 16%, all you need was 16% gain to make up for that. If you're good at math, you would know this. If you lose 16%, you actually need about 20% to make up for that 16% just to break even. And like I said, I'll do a full video about this in the future because it can bend some people's mind, but just lightly just consider that for now, as you need more profit to make up for losses. So if it's down 16%, just to get back to where it was, it needs a 20% gain. So that's why I love buying dips. I can't say it enough. It's a huge part of this channel, and making money in the stock market is buying during dips. So Li Auto, I think I'm going to be swing trading them up to about, maybe not an all-time high like 43. I think long term they can get to an all-time high, maybe 1 to 2 years. But in the short term, I want to see them going up to like $35. And I'm looking for probably like a 40 to 60% gain on Li Auto. Okay, so CCIV, one of the more riskier stocks on the list, down 21% still in the past month. And from its all-time high, it's still down 53%. So it couldn't be a good buying opportunity. Just know you're going into this one with more risk. There's still a lot of unhashed details. They were promising like a number for production, like 4,000 cars to be produced this year. And now they're saying they're going to have to push it like 12 months to even produce one car, let alone 4,000. And that's Lucid Motors we're talking about. They did get a lot of hype around their stock, is why they rose up considerably too. I think long term, they will get back to all-time highs, but that's once Lucid Motor actually gets the ball going and they get on their grind. So with that being said, I would be buying this one very reluctantly and with caution at the same time. And I'd be wanting to swing trade this one up to about $35 to $40, I think is pretty realistic. All-time high, it looked like they were almost at $60. So that's nearly more than a 2x. But I would probably be looking for like a 40 to 60% gain on CCIV and just exit the position and not have to worry about it going down or up. But if you are a long-term holder, you definitely wanted to be buying the dip because Lucid Motors can be a great company in the future. And then we have Workhorse up 8% also. This is also a riskier one along with CCIV. And that's because, they lost the contract. Remember, after they lost the contract, Cathie Wood bought into them very heavily. So maybe she knows something we don't. And then after that happened, we got news that, Workhorse might be getting half of the contract with USPS still. So there's a lot of speculation going on with Workhorse. Buy into this one with caution too. But they're still down 56% in the past month, guys. That's bonkers. 56%. That's half of a huge company. And what you'll see is I have $726 in them. I have a little bit too much money in them for such a speculative position. But the reason why I do is because they've been following this support very consistently. So you can see all the way back to July, $16, $16. What did they hit again in November? $16. What did they hit again in March? $13 was a little bit lower. But right now, with that being said, they broke past the support. They're back to $17. So for this one to rally up to $20, $25, and even go as high as $30, $28, $30 is not unrealistic for this one. Just remember, it's a little bit more risky. Oh yeah, I forgot to give them grades. I'll probably give CCIV like a D. I'll give Workhorse a D, and I'll give Neo an A actually. And we'll give Xpeng and Li Auto a B- on both of those also. So back to Workhorse. I'm buying right now I have an average cost of $16, and I want to be swing trading. I'm looking for like probably a 50 to 60 to maybe even 70% gain on Workhorse. And that's just because I bought the dip so hard. So even if they just go back to where they were a month ago to $40, that can be a huge like 70% gain on Workhorse. All right, so next up we have Plug, PLUG, up 9%, up 13% in the week, still down 29% in the last month. So just because you see them up 13% in the week, you say, oh, did I miss the dip? But remember, in the last month, they're still down 29%, which is a considerable amount. So if you're looking to swing trade a 30 to 40% play, this can be the one for you also. Well, any of these really can, but this one is going to be a swing trade. And if we look, I do own them on my other account. I think I own like $200-300 only though. And was buying during the dip. I'm looking to swing trade. I'm looking for about like I said, about a 50% gain on plug. Plug, I'll probably give like a C minus, by the way, just because there's so much hype behind them. So they fall into a little bit more of a risky category. HYLN, I'm actually going to be giving them a C also. And with that being said, they're down 10% in the month. They're not as big as a dip of the other ones. But if you go back to their all-time high, that's when their big dip comes into play. They're even down 76 at one point. So that's a huge dip, and it's a huge buying opportunity. And on this one, I'm just looking for about a 30 to 50% swing trade. As you can see, I only have $321 in them. We're still actually down 13% on this one, but I think for it to be getting back up to $20, $23, $25 is pretty realistic. So overall, I'll probably give this one a C minus or even a D just because the risk involved. But they're probably going to be getting closer to a C minus just because they're so low right now. And I don't think they can go much lower. So the risk versus reward on this stock is there because for them to be going down to $7, for example, is a lot less likely for them to be going up to $30. So for you to lose half your money to gain double your money, I think for this one to gain double is a lot more realistic than losing half of your money. And the last one we're going to be talking about is a car charger for the electric vehicles. And I'm going to be giving this one a B because personally I use this one all the time. Blink is everywhere in California. But they might be getting a B minus just because, or maybe even a C, just because they're already up 29% in the week. But if we go to zoom out for the bigger picture, from an all-time high, they're still down 32%, which is a huge profit margin. Now, in my opinion, I'm going to be holding this one for long term. I wanted to build a bigger position. I didn't expect them to go up that much. But the good thing is I also own about 500 more on my Fidelity account. Now, I'm going to be holding on my Fidelity account for a long term. That's more of what that account's for. And this is going to be more of a short-term account. Even though on my Robinhood account, the one I'm showing you right now, I do a lot of short-term and long-term trading. And if you're long-term trading, you don't want that many stocks to hold for long-term. But if you're more of a swing trader, then you'll be talking about more stocks because you're in and out of a lot of different plays within the span of 2 weeks or even 2 months. So we're already up 16% on this one. I'm probably looking for about a 50, 60, 80% gain on BLNK to take profits. But like I said, I think that this one, there's a lot of value in this one for the long term, is why I got a little bit higher of a rating too. So guys, that was the video. I hope you did enjoy it. Remember, we're at an all-time high on the account right now. We're absolutely rolling in the money. So if you want to learn from me, just DM me on Instagram. I'll be happy to help you out and put you in the program. With that being said, if you found value in this video, smack a thumbs up. It goes a long way. And when you put a thumbs up on the video, it helps people find me easier, my videos, so you're helping other people. And also share this video with a friend if you think they'll find some value in it. Comment below on what you want the next video to be about. I'll let you guys choose the next video, and I will see you in the next video. Remember, don't time the market, buy the market. Peace.